And there's the YouTube.
Hey, David, can you just share your PowerPoint screen?
Yeah, sure. Let's do that.
I'll let you do that because you didn't give me enough time to figure this thing out.
Okay.
All right. That's the best part of the day. Look at all these people popping in here. And since I know a lot of them, they're from all across the country, which is really cool. We got some new folks on too that
Great.
that's attended. And then we have Carrie and we got Ori locally here. And that is super, super cool. Let's see if I can see everybody here. We're going to start in just a minute. People are still popping in like popcorn here. I see Nora just came in. I think Nora is from Phoenix, maybe, out in that area. Oh, and I see Jeannie's here. And to show you how good I am today, Jeannie is either in Texas or in Canada.
Well,
Debbie,
presumably she didn't go to Canada for the air quality.
yes. Oh,
And the good news is that Chicago air quality is much better than it was a few days ago.
yippers, yippers, yippers. All right, we're still admitting folks, but Carl, if you want to get a little soft start going here, and we can get this thing underway.
All right, welcome everybody. Glad you could join us. This is the July meeting of the NWSOFA Fiscal and Economic Issues Discussion Group, hosted by myself, Carl Falstick, and David Doney. And we'll have a brief intro of what the heck is NWSOFA from Bill Davis. So David will stop sharing for the moment, and Bill will share his screen.
All right. This, as we all know, this takes me a second or two.
Because he was all set up to do this, because he
I
knew he
was.
was going to have to do this.
I was. And then I went to another screen. I don't remember why. All right. Let me just bring this up and Debbie, can you see the screen? Debbie?
Yes, sir.
Okay, you can see the NWSOFA?
I can see it. You just need to do it. And there you go. All right.
Well, welcome everybody to NWSOFA, which stands for Northwest Suburbs Organizing for Action. When we got started about 13, 14 years ago, we had 17 members, and we were solely in the Northwest Burbs, what we call the land beyond O'Hare. And we became a OFA, an Organizing for Action, under President Obama. We're now an Indivisible chapter. And Indivisible has 2,900 chapters all across the country. Every one of those little dots, gray dots, is a chapter. Tonight, Carl and David are going to be hosting the Fiscal and Economic June Review. And as it says, it's 13 years running. And Carl, it may be 14 now. I didn't go back and double check that. But we believe it is the longest U.S. economic discussion in the United States today on Zoom, done every month. So,
well, we started after the 2012 election, so we would have started at 2013, which would have been 13 years ago.
Okay, very good.
And I didn't actually get started doing it until the fall of 2013.
That's correct. Correct. There was a great person that was doing it before that. I can't remember his name though. So our goal on all of the meetings and all the issues that we have is to organize and educate you, the attendees, so that you understand the facts, you know the issues, you can get the fact, you can build a real understanding. That should lead to sharpen your arguments so that you can think more critically, you can practice clearly, and you can make your case with confidence. And most important, you can communicate to your audience. And whether that audience is just one or two people having a cup of coffee at a local coffee shop, or whether it is your whole family around a Thanksgiving or Christmas table, or you're leading a meeting, when you communicate with them, you engage with purpose, you connect authentically, and you inspire action. So we figure if we're giving you the information, you can take that and utilize it. So Indivisible, NWSOFA has grown quite a bit. And now we have what we call our twin snowflake principle. The left-hand side in the red shows you all the different ways we communicate. You get newsletters, you get mobilized, you get tweets, you get all kinds of YouTube and Facebook responses. We inundate you so that you know what we're doing. And many people say it's just too much sometimes, but then every once in a while people go, I didn't know that you were doing that. And that's because if you look on the right-hand side, you can see that we have 22 issues now, issue teams that present almost monthly. Some of them are every other month. Some of them are every week. A couple are every week, twice a week. So it is a lot coming at you, a lot of information, almost all on Zoom. So just a little bit about what we've done. Last year, we had over 600 Zoom and in-person events. This year, we're projected for now over 700 Zooms and in-person events. And 95% of those are Zooms. Our membership now in the Northwest Burbs of Chicago and Northern Illinois is about 17,000, and we are now at 27,000 Zoom members across the U.S. You add those two up, you come up with about 44,000. We know there's about 4,000 names that are duplicated in those two banks, so we're just at 40,000. And as you can see, that background with that upward spiral, that number 4 says the Zoom boom. Literally, during the pandemic, we were told we couldn't have meetings anymore. We didn't know if we were ever going to survive. One of our members called up one day and said, have you heard of this thing called Zoom? We said no. So 4 of us tried it out. 3 of us are on this call right now. And the rest is history for us. So our secret sauce is we have 30 all volunteers leadership team that work on both the issue side and the communication side and help us every day getting our programs done. Just to give you an idea, our impact dashboard for June, we had 61 events. We created 13 YouTube videos. We generated 30 Substack articles, added 1,900 new members, sent 27 newsletters. We had 367 folks view our YouTube videos, which are on our website, NWSOFA.org. And we had 5,100 members that engaged in 2 or more of our events. So that was a really complete month. Just to give you some ideas, just going left to right at the top, we have coffee and conversation every morning, Monday through Friday at 9 a.m. That's just a conversation. Then we have the Culting of America, that's a book club. That's every Sunday at 9 a.m. We have our how-to hands-on, helping people with technology, how to use everyday technology to be more efficient. On the second level, we have a happy, unhappy hour every Friday at 5. Our group does Sorting Soup, which is the 5 main issues every week. Thursday at 5, deep dive into it. Again, very conversational, very interactive. We show films like Bad Faith. If we go down to the bottom level, our Stand With Women group has monthly meetings, and we team up with other groups. We do this No Lies Lab, which is social storming, with 5 other indivisible groups in the burbs of Chicago. And then Inspire does a monthly program on what's called our Restore Our Democracy. The last month it was on collective courage. We do a lot of in-person events. We're at the Palatine Street Fest. That's the old name for it. You can see we're standing around with some folks, just chatting with them and talking with them. It was great, except for the rain. On the right-hand side, and at top, you can see our big chicken, 34 feet tall, over No Kings 3. We do a monthly pizza night, which we just had this last week. Usually 20 to 40 people show up. Free pizza, free pop, and free advice. And we do have our annual picnic, our 13th, coming up here on August 22nd. That's a Saturday, noon to whenever you people leave. We have nonstop folks, about 120 to 150 show up. Interesting enough, there's never more than 40 or 50 on the ground at one time. They just come in and out, they're canvassing. It is a really exciting time. So tonight, during Carl and David's presentation, we're asking you to ask your questions in chat. And when you start your question, start it with a huge capital question, Question, and then write your question. That way, David and Carl at the different breaks or whatever can locate a question versus a comment and can actually answer that. About 8 o'clock tonight, we'll take a little break for about 5 minutes or so, and we'll answer some of those questions and have a little free-form discussion, and then we'll get back at it. So thank you all for being there tonight. It is Fiscal and Economics Issue Team. It's the June review. Carl, take it away.
Okay, David, if you want to go ahead and share the screen. Little technical difficulties with me sharing tonight, but we'll hopefully get over those. But the first area we're going to be talking about is the economic overview and then the labor market. The first Friday of the month, we got the employment report for June, which is generally about the most important economic report of the month. It comes from the Bureau of Labor Statistics, and it gives us the seasonally adjusted data for job growth, payroll job growth, as well as household data, which gives us the unemployment rate and the unemployment rate, but also there's also a number of people employed in that, which is different from the payroll jobs, because the number of people employed in the household survey includes your Grubhub delivery folks and your Uber and Lyft drivers, and basically your 1099 workers. Folks that aren't on a payroll, they are actually getting paid directly and then have to file taxes independent of the company that they're doing the work for. So we're going to start with the labor market and the economic overview, and let's see what that has to say this month. Basically, things that are going well. Wages since Trump took office in January of 2025, wages are up 5.2%. Prices are only up 4.3%. These numbers are through June. And the prices are the CPI numbers. From inauguration in January, stocks are up 25% as of last week. The S&P 500 is up 9% this year as of last week. We have near record real net worth in the first quarter for the bottom 50% and the other groups, and a record real median income in 2024. We'll get the 2025 number, I think, in September this year. Not doing so well. There has been very little job creation since Trump took office, very little payroll job creation. especially since he announced his big tariffs in April of 2025. And on the household survey, there's 230,000 more unemployed than there were in January 2025, and there's 1.6 million fewer employed. So the payroll employment has gone up, but overall employment has come down. The unemployment rate has gone up a little bit, 4% when he took office versus 4.2% in June. And as of May, the Fed's preferred inflation measure was at 3.4%. That's the core PCE inflation versus their 2% target. We will get a June number for the PCA towards the end of this month, probably sometime next week. So Trump had listed the things at the beginning of this year, how he was doing. And so the question, and the New York Times said, how is Trump doing? Lower food prices, not happening. Grocery prices are up. Lower gas prices. Gas prices, we'll go into a more detailed slide later, but they basically were flat throughout 2025 until right before Thanksgiving. They actually went down a little bit. Then Trump started his war in Iran, and gas prices went up a lot. Then they came down, then they're going back up. Lower energy costs, no. Electricity prices are up. The auto industry sales are up a little bit. We have lost manufacturing jobs. Stock market's up. The national debt has gone up since Trump took office. And the trade deficit is down a little bit. So a few things are better, but in general, no. But, Trump tells us and told us, last Thursday, it's the best economy ever. And we all believe him. Right. So anyhow, we've got the big Republican 2025 tax acts and tariffs, otherwise known as the so-called One Big Beautiful Bill. And if we look at how that affected people, but the combination of the One Big Beautiful Bill and the tariffs, we see that if you were in the lowest quintile of income, it hurt your after-tax income by almost 30%, over 25%. If you're in the second quintile, you're down if you're in the middle quintile, but if you were in the top quintile, your income went up. And if you're in the 95th to 99th percentile, your income went up over 20% after tax. So there are some winners, but most of us are not those winners. The millionaires and billionaires are the winners. So let's look at our outline for what we're going to talk about tonight. And we've got the labor market, household finances, the Fed meeting, Trump's tax cuts, the one-year impact, what's in the new housing law that passed and was allowed to take effect when Trump didn't sign it after 10 days. So we all remember that from our studying the Constitution back in grade school or high school. Q&A from last month's meetings, as well as some other stuff we'll talk about. So if we look at the monthly jobs report, as I say, it's one of the most important economic news releases. The net number of jobs added or lost helps tell us the strength and direction of the economy, and is usually a big indicator of if we're in a recession. Historically, 100 to 150,000 jobs needed to be added every month to keep the unemployment rate steady as she goes. More recently, it appears that number is lower than that because we're still keeping the unemployment rate low, even though job gains have been significantly less than the 150,000. So if we look at a little graph of the payroll jobs, basically since the pandemic, we see that there was a pre-pandemic high, a big crash during 2 months of the first 2 months of the pandemic, back in, I think, March and April of 2020. And then there was a recovery under Trump, and then stalled out for a minute. And we actually had a loss of jobs in December of 2020, but then we had a gain of jobs under Biden. And then after Trump took office in January 2025, basically job gains have been minimal. If we look at recent job creation, we see that starting in 2025, we've got negative months popping up. We had all positive months under Biden, I think, but we had negative months. And then we've got so more recently, the 3-month average gain is 111,000, although given that, so we added 57,000 jobs in June. We had added a lot more than that in April and May, but the June report revised the April and May numbers down by 74,000 jobs. So we actually are reporting fewer total jobs than we were in May. Plus 57 minus 74. If we're looking at where those jobs are coming in, we see that basically healthcare is the big jobs engine. And curiously, a big job loser was leisure and hospitality. And we'll go into that in a little bit because there was a Fortune article about all these numbers are all wrong. And the thing to remember is that these numbers are after seasonal adjustments. And so let's go into that in a little bit in detail. We see that leisure and hospitality, with the World Cup and all the big crowds in the bars, we would have expected this to go up. And again, the seasonally adjusted number was down. However, we see is that the not seasonally adjusted number actually went up by 373,000. The last bullet on the far left side. It's just that typically in the month of June, we get more than that increase. So the seasonal adjustment took a plus 373 number and revised it down to a loss of 61,000 as seasonally adjusted. Hopefully that's making some sense to people. If not, save your questions at the end of this section. David and I will try again to explain it. So recent job creation and perspective. We've got Obama's second term, we added over 10 million jobs. Trump's first term, we lost 2.75 million jobs, primarily because of the pandemic. Under Biden, we added 15 million payroll jobs. And Trump, so far in his second term, we've added a little over 700,000 jobs, which means that combined 2 terms, we've lost just over 2 million jobs under Trump in his greatest economy ever. And if we're looking at it as a monthly basis, we see that, again, overall in Trump's first term, we lost 58,000 jobs a month. In Trump's second term, we're adding 42,000 jobs a month. And that's, of course, why the numbers for Trump are a net negative. And if we go way, way back to when they first started keeping these statistics, we see that since February of 1946, just after World War II, under Republicans, we've added 33 million jobs, and under Democrats, we've added 86 million jobs. 7 presidents for each party. So basically, if you want job creation, you want a Democratic president. If you want the unemployment rate to go up, you want a Republican president. That's been true for every Republican president except Reagan. So now let's talk a little about the unemployment rate. Next slide. It tells us what the percentage of the labor force is not working. Now, the labor force is the people who are working plus the people who are considered unemployed. And the unemployed person is a person who is actively looking for work in the past month, is available for work, but did not do any paid employment during that month. And that's where we get our 4.2% of the labor force. So if we look at the unemployment rate, we see that Trump started at 4.7% in his first term. It had gotten down to a low of 3.5%. Then the pandemic hit and exploded up to over 14%. And it was coming back down before Biden took office. So in Trump's first term, the unemployment rate went from 4.7% to 6.4%. Under Biden, it came in at 6.4%. It went lower, but when he left office, it was at 4% in January of 2025. And it's currently, under Trump, it's going up 0.2%. So again, in Trump's second term, the unemployment rate is again going up. And if we look at the household survey, which again gives us the unemployment rate, we can see that this household survey doesn't have good numbers for Trump. It's interesting that in his speech on Thursday, he said we have more people working than ever before. And we may have more payroll jobs, but in terms of number of people working per the household survey, that is not true. The number of people working under the household survey has actually gone down by over 1.5 million since Trump took office. If we look at the employed number in the middle of that chart. In the more recent month, we see that the number of employed actually went down by 500,000. The number of unemployed went up it went down by 213,000. And the people leaving the labor force was over 800,000. So Trump will never tell us about the household survey numbers. And the unemployment rate fell for the wrong reason. It fell because the number of people in the labor force declined substantially, not because people got jobs. So if we look at what's happening both in terms of payroll jobs and employment, total employment from the household survey, we see that pretty much from when Trump took office until November of last year, they were basically flat, both of them. And then we've had a little bit of growth in the payroll jobs and a lot of decline in the total employment. What we see is that who is gaining those jobs? It's women. Men are losing jobs. Probably won't see that from the Trump administration either. And we see that we have the prime age employment, 25 to 54 years old. We were at 80.4% prior to the pandemic. It dropped and then it's gone back up. And it was basically holding about the 80.4% level until last month, and we had a little drop to 80.2%. We'll see that that's a 1 month anomaly or whether it ends up going up or continues to go down. We'll see as the months go forward. Positive news, there's slightly more job openings than unemployed in June. Actually, this was May numbers, sorry. Look at the June numbers at the beginning of August. So basically the ratio of job openings to unemployment is 1.04, which is certainly better than it was during the pandemic or recovering from the pandemic. And now the next area we're going to cover is household finances. But first, are there questions about the labor market?
We have a couple for you. Chris is asking, why is there a gap in the line at January 2026?
Probably not in January 2026. If you remember,
Prior to that, I
yeah,
think.
if you remember last year, we had government shutdowns for a couple of months, actually a number of months. And because of the government shutdowns, the Bureau of Labor Statistics was not able to compile the data for the months when they were shut down, and therefore they do not have data for a couple of the months. And that's why there's those gaps.
Right. Ori has a question. Does that decline in the labor force have any connection to the deportation and or the fear of immigrants to work?
Probably. I don't know that we've got
Statistics.
yeah.
Mhm.
But certainly if we've lost workers, it may have something to do with why we have lower employment and a decline. Let me set my phone on do not disturb because it's making noises. Sorry about that.
Okay.
If they're
Would you
leaving the
like-
country, they would be clearly they would not be in this population number. But if they are hiding and not working, certainly could be part of that not in the labor force number going up. It certainly could be. We'll take a look at that. It's a good question. There's a lot of impact on job creation because of immigration restriction. So we'll dig into that.
Thank you, David. Would you like me to continue, Carl?
You have more questions, certainly.
I do. And Mary is asking, is there a reference to age groups in employment data you presented?
Not on the employment data we presented. Certainly the Bureau of Labor Statistics keeps these in much greater detail than we present.
All right.
And what we have is the unemployment rate is higher among younger people.
All
It's a
right.
good question. We can look at that next month. We can add a slide that analyzes the ages. I'm trying to think if we did it last month. I know we created some slides for that. I created some slides recently, but just so you know, we do gather about 120 slides during the month and knock it down to 60 for this group usually. So we may have had it in the other bucket, but yeah, we'll look at that, the aging.
Okay. All right. Nora has a question. How do you explain the discrepancy between payroll numbers and the household survey?
As I explained earlier, people who are Uber and Lyft drivers and Grubhub drivers and other 1099 workers are not in the payroll survey, but they are in the household survey.
Okay. And one last question right now is from Rich, and he is asking, is RBLS still the gold standard in the world?
Well, it's certainly the gold standard for the US. And whether it's as good as it was back, under the Biden administration, there's been DOGE cuts and elsewhere. So there's fewer people compiling the data. And so it's probably not quite as good as it was. On the other hand, it's probably the best that we've got.
Okay. And at this point, that was the last question.
Okay. So let's go to household finances. And David, do you want to do that or do I want to do that? I'll start it.
Go ahead. Yeah, keep going. Do this section. If you need help, just holler.
Okay. If we look at the first slide under household finances, what has happened to some key measures? Since Trump took office, the price of gas is up over 30%. Stocks are up about 25%. Electricity prices are up about 8.3%. Hourly wages are up about 5.2%. Rent is up a little less than that, 4.6%. Overall inflation's at 4.3% for the overall CPI. And groceries are up 3.4%. That's the CPI food at home. So not terrible. Wages are more than the overall CPI, but depending upon where your money gets spent, certainly taking a big hit if you have a long commute or a gas guzzling vehicle. Looking at the next one, we see the gas prices are up 72 cents per gallon since Trump took office. And David picked this up on July 13th. I think we were at $4.01 a gallon this morning. Basically with the resumption of the Iran war, and crude oil prices have gone up substantially, and gas prices have not gone up nearly as much because Brent crude was up, I want to say it was up over $90 a barrel, and West Texas was over $80 a barrel. So not a good thing. And if we look at the price level, what we see is that because the gas prices had actually gone down as they were measured in June, that meant that the overall inflation rate fell 0.4% in June. And again, those gaps are when we had the government shutdown. And all indications are we may see a government shutdown again this year, although Republicans are doing their best to avoid having government shutdown right before the midterm elections. So we'll see how successful they are. And again, the CPI inflation, what we see is that when Trump started, CPI inflation was at 3%, contrary to his comment that when he took office, inflation was the highest ever. And even the 14% or the 9% under Biden was not the highest ever, because it was even higher under Reagan in 81 and 82. But what we see is that Trump started at 3%, then it went down, and then it went back up. And if you want to look at inflation categories, I'll let you read these yourself, but the big one in the negative sense is energy and gas prices have gone up a lot. So we currently have the highest inflation, next slide, currently have the highest inflation among any of the G7 countries. Again, not something to be proud of, but again, Trump will keep telling you this is the best economy ever, and he's doing a bang up job. So take that what you will. And PCE core inflation, which is the Fed's primary, was 3.4% in May year over year. And again, we'll get a new PCE core inflation number towards the end of this month. It takes, for whatever reason, it takes a little longer for the Bureau of Economic Analysis and the Commerce Department to compile the PCE number than it does for the Bureau of Labor Statistics to compile the CPI number. And so with the inflation that we've had over the last year, real wages are actually down over the last year, but up over the last month because inflation was down 0.8% in that month. So nominal wages may not have gone up very much, but inflation going down that much helped them. The real wages go up. And personal savings under Trump, what we see is that personal savings have gone down about 40%, which indicates that people are hurting and struggle to save money under Trump. And again, if we go back to, we're not going to physically do this, but if you remember, we looked at the one big beautiful bill and it's a combination of that and the tariffs for people in the bottom 40 percentile of incomes. They're behind in terms of their income after tax. And a lot of costs have gone up. So we've got people who are buying more stuff since Trump started, and I'm not sure if they're buying more stuff or they're paying more for the stuff they're buying.
This one is just buying more stuff. This takes out the effect of inflation. So we had a question last month from people saying, okay, Dave, you're telling me, let me go back a slide here. You're saying that 60% of this decline in savings is due to higher prices and 40% is due to buying more stuff. So what stuff are they buying? It was a great question. So ask at your peril. We'll put it together. We'll do a slide. And here it is. So this just tells you the percent increase on the vertical, and then the dollars in billions that people are spending. And this tells you where they're spending, which is healthcare. Probably not a surprise. People are buying more units of healthcare. People are buying more units of financial services and insurance, and et cetera. So these are the highest percent guys up near the top, and then here are the big dollars, and healthcare and financial services are both. But it's overall healthcare, and it shouldn't be too surprising because you see that in the jobs numbers too, that the healthcare jobs are where the action is. There's a lot more people working in healthcare because there's a lot of demand for more stuff. So those are consistent. And the leisure people, like the recreational services, recreational goods, those are also up significantly in percent. So even though the leisure took a hit the past month, it's also been up. It's been sort of the second biggest gainer over the last, I think, during the Trump administration. So yeah, people are spending on recreation, healthcare, financial services, and insurance, et cetera.
Thank you. So real disposable personal income per person is about where it was when Trump started. It went up initially under Trump, and with his tariffs and the war, it's gotten back to where he started. Probably not a slide he's going to show. So little or no discretionary income above essentials for the bottom 40%. And as you get into the higher income levels, we see more discretionary income. Okay, and real household net worth by wealth group. And this is from the Fed. And it basically is saying that household net worth has gone up among all groups. For lower income people, if anything, it's probably their house and not their stocks. But on the other hand, President Trump's net worth has gone up substantially since he took office. So he's a big winner.
Well-deserved compensation.
Yeah, because he, isn't taking any compensation. Right. Okay. What we see again in the household net worth and the stacked bar, next slide, we see that there's 174 trillion in household net worth, and our national debt's 39 trillion. So our household net worth is substantially more than our national debt. And if we could figure out a way to legally tap it through some higher taxes, we could go ahead and we could actually get it strictly out of the top 1%. But since wealth taxes are probably not allowed under the Constitution currently, that would take a constitutional amendment, just like the income tax took a constitutional amendment way back in the 18 teens, or the 19 teens, I think. Is that the 16th Amendment that got us that? In any case. AI stocks have gone up substantially since they started. We all wish we'd bet on the right AI stocks at the right time. I didn't. But my overall stock market returns are not terrible. I think the last time I looked at them year over year, they were around 18, 19%. And I'll take that for a stock market return using, what do we call those things? All right, and summary measures and graphs. And this is an important one, if we were to look, a lot of hay has been made about the fact that we're going to expend the Social Security Trust Fund by the early 2030s, whether that's 2032, 2033. Now, when they first started reporting that about 20 years ago, that was a really long way off. But as it keeps getting closer, and the years go by, 2032, 2033 gets a whole lot closer. I think somebody might pointed out that 2032, the senators are going to get elected this fall, will be in office when the Social Security Trust Fund is extinguished unless we do something. And the last serious attempt to do that was Boehner and Obama back in 2011, and leaders in both parties nixed them trying to do a deal because it was going to take cutting some Social Security benefits and increasing some taxes to go into the trust fund. But what this says is if we currently only the first hundred and some $1,000 of income, 184,000 if you look at the top right, is subject to Social Security taxes. So for most of us, that's not a big thing. Most all of our payroll income is subject to Social Security taxes, but for the top earners, they're not. That's not true. Now, if we went ahead and eliminated that cap, it would extend the life of the Social Security Trust Fund by nearly 30 years and cover about 2/3 of the shortfall over 75 years. So it helped. It wouldn't be a total solution, but when our Republican friends, conservative friends report that it's not a total solution, keep that in mind, that it does make a big positive impact. And it's a big help. It would push it off from 2032 to 2060. And I don't plan to be alive then, so it's not my problem. No. Wrong approach to life. Okay. So questions about household finances?
We have some questions. Renee is asking, and this may be a challenge, guys. Is there a breakdown of who's spending by region, economic group, age, education, gender, etc.?
We have not compiled that. Some of that has probably been compiled by government agencies, either the Bureau of Labor Statistics and or the Bureau of Economic Analysis, but I haven't seen it.
We showed you that the bottom 40% are barely getting by, meaning they are the things they need are pretty much absorbing all of their discretionary income. So it's not that group, it's going to be the upper parts of the distribution that are doing most of the spending. We've shared slides before. I don't know if they're in this one, but showed that like the top 10, or I forget exactly the ratio, but it's like the top 10% are doing 50% of the spending or something. I mean, it's an amazing skew in the statistics about how much the rich are contributing to the spending and the GDP. So it's, you saw it in that graph earlier about the different groups. In terms of age and other things, I mean, generally the older you are, the more affluent. The most of the net worth is in people that are retired or near retirement. So they're the ones that are likely to be spending that money, especially with a stock market that's booming like this. A lot of those folks have more in financial assets and are feeling pretty rich right now. In terms of like, races and ages, I mean, clearly the Asian and the whites have the highest incomes generally as a group. Hispanic, African American are going to be lower. So those groups are not going to be doing the extra spending. It's going to be whites and Asians, although the number of Asians isn't huge. So it's really your affluent whites that are going to be driving those numbers, just because of the way the U.S. is, the distribution of people in the U.S. but though that's a great question, and that probably is answerable. It's an interesting, you've given us a good challenge there to take a look and see if we can spot it. So remember, we do answer questions. There's a whole section here on it today. And then we answered that one already about, what are people spending more on? And we did show you that. So we hear your pain, and we do try to figure out some of this stuff when we do it in the next month.
All right. I knew it would be a challenge for you there.
That's a tough one. Yeah, there's a lot. Yeah.
All right. Another question from Marilyn. On slide 35, I didn't see travel, or did I miss it? Or was it put under a different name?
It's
Okay,
recreation.
Okay.
And that's going to be in here.
All right. Okay. Thank you, guys. We have another question from Renee. What's the breakdown for who invests in stocks?
So the top 10% own about 90% of the stock. That's an easy way to remember. Kind of, it's 10 and 90. Top 10% owns 90% of the stock. And I think the top 1% is like half of that, like 45% is owned by the top 1%. So it's very, very skewed to the wealthy. You have the bottom 50% has very little, like almost no stock. I don't know the exact percentage, but let's say it's less than 5. It's going to be very small. So and about 60% of Americans have some stake in the stock market through their 401ks. Usually it's they own an S&P 500 index fund. And so they're up about 10% this year and about 25% since Trump started. If you remember, probably the average stock return by year has been about 13% for Obama, and then Trump won. Biden, it's surprisingly close, like within plus or minus 1% of each other in terms of their annualized return on the stock market. There's almost no distinction between those three. Trump won, or Obama, Trump won, and Biden. So we'll see how Trump does here, but if he's up 25% over a year and a half, he's doing okay on that measure. We'll see how it goes from here, where it goes. But stocks are fine. That's not a part of the economy that's doing badly, and it's driven by. We'll show you in a little bit. There's been a very large corporate tax cuts because they were allowed to expense a lot of their investment immediately. So you think of depreciation over 20 years, typically they're doing all the depreciation in year 1. They can take all that out. So you're going to see a giant drop in corporate taxes. We'll show you that slide is coming up. CBO did a nice number on that. So we'll give you that. But that is also driving some of those stock market returns. And, in addition to the fact that we've got this AI boom / bubble going on, where there's this incredible race to see who can build Skynet first for you Terminator fans, but the AI, an AI that hopefully will want to live with us and not take us out. But yeah, we're racing headlong towards science fiction problems. But anyway, that is an unusual thing that's happening that has been helping the stock market quite a bit. We mentioned it briefly earlier. There's an interesting thing going on where a lot of that bubble money that had driven up those AI stocks has come out. There's been about a 30% decline in those off their peak. And so that money, though, has gone into a lot of blue chips. It hasn't gone on the sidelines. There's not a fear that the stock market is going to crash overall. The money has just gone elsewhere. So a lot of big blue chip companies, Johnson & Johnson, ADP, Paychex, there's a whole bunch of them. The pharma companies, AbbVie, stock everybody should own AbbVie. I mean, it's a great. There's been a lot of increases in those basic portfolio staples as that money's gone down, and it's interesting to watch it day by day because the days when the chips are up, the blue chips tend to be down, and vice versa. It's sort of like an interesting thing happening there. So next question.
The interesting on stock returns recently is that as crude oil prices went up, stock prices went down. But this week, crude oil prices went up and stock prices were going up. So
yeah, it is amazing that people, that that sort of the stock market is impervious to world events, like shutting down the Strait of Hormuz would have crashed the stock market 20 years ago. And I don't have the answer for why this is. We shared some slides a couple months back from Kyla Scanlon, who's an interesting author on economic topics and has a pretty big social media following. But her view was that people they believe now that the stock market has an insurance policy on it, meaning that the government will step in and save it. So it's too big to fail, so to speak. So the government will, if there's a giant stock market drop, will cut interest rates significantly, quickly, or we'll bail out the large players. They'll bail out companies that get themselves into a lot of trouble. So that was her theory. I can't tell you that's the right one necessarily, but she's a smart lady. It's worth keeping that in mind, and that the stock market has sort of it may have used to be called the Greenspan put kind of underneath it, that there would be some effort to bolster it if it falls too much. So we'll see. But corporate are great. I will show you the slide about how much corporate taxes have been cut. So corporations are doing well both before taxes and after taxes. It's a long way. Stocks have really gone up, and they seem to have hit a wall now. So more to come.
Right. Here we have a next question from Carrie. Does the Social Security fix to 2060 include declining birth rates and robots/AI replacing paid jobs?
No. To that, they assume a lot of things about declining birth rate, all kinds of stuff. So they have very complicated economic models that they use, and we're sharing what's called the intermediate assumption here. The Social Security Administration does a variety of scenarios. So this is their middle scenario that typically gets the news. Could go very differently than this, but I think you've got as good an estimate as you can get here, and you think about the kinds of things that economists and statisticians would think about. But mostly, they have estimates about what they think the population is going to do, and what immigration is going to do, what incomes are going to be. I mean, it's a giant. It must be one heck of a computer program.
Okay. And David, just to let you know, you are freezing up a bit. So Rita's
good to know.
question. Yeah. Rita's question is, do you track economic data in the agriculture vertical?
No.
Okay. Okay. Carrie has another question. Does the 90-10% for stock include pension plans and 401ks? Not sure if that was answered.
No, that's a good question, and let me make sure I give you a precise answer. I'm going to take that as a to-do. As I was saying, how do they treat that? Distinction from giant pension funds in that math, but I think they do. Meaning, I think the different. Meaning, a giant pension fund is not one person out of 334 million in the United States. It's an institutional owner. It has a certain number of people it's representing, and that's part of the math. So I would say that it adjusts for that. It's considered in the math, but I'll verify that.
Okay. Rich's question, can the government continue to be an insurance policy for the market with record deficits?
Can you repeat that?
Sure. Can the government continue to be an insurance policy for the market with record deficits?
I think the government absolutely can, and a lot of that would be done by the Federal Reserve anyway, which they can sort of print money. I don't think there's ever going to be a limit on what the government can do if it decides to. Without going into our usual spiel, government can always spend based on legislation, and the Fed can do an awful lot without legislation. And you saw the government conjured $4 trillion during the pandemic, a 2 trillion Trump and a 2 trillion Biden, and came up with the money immediately. And we came up with the money for the Iran war. We keep coming up with money when we need it. And so we'll always find a way to do that. It should not be a real constraint.
Okay, the last question I have.
It could be a political constraint. It just won't be a real.
Yeah. Okay, I have one last question for
Let's
now,
resume.
and it's
Let's do it after the break.
Okay.
Let's do that after the break at 8. What do we want to do, Carl? 8:12 or so?
Sounds good.
8:15. All right. All right. We'll see you guys back then.
Okay, taking a break, everybody.
As a note to everybody, this is Bill Davis. We have sent out the slides and the link to the YouTube video to everybody who RSVP'd through Mobilize. So those have already been sent out. I'm pretty sure tomorrow morning at our coffee and conversation, which is at 9 a.m. every Monday through Friday at Central Time. Same link as this link to this presentation tonight. I see a number of our coffee and conversation attendees, so we'll probably have a little segment on this. It is a conversation driven by those who attend, so it should be kind of fun. And there'll probably be some more questions that will funnel up to David and Carl. They do spend an awful lot of time on this. We got a nice cross section across the country, and I see some folks that help us during our rally this weekend. That was very hot and very humid in Arlington Heights. Thank you all very much. So I think David and Carl are ready to come on back.
Debbie, did you have the one question for us that we'll try to answer, and then we'll proceed?
One question has multiplied since we waited.
I believe it. Now we'll get to them after the next section or
I
so.
know. Yes, I'll go to the one question that I was going to go to from Renee. Have bailouts helped average investors / consumers, non-corporate investors?
That's a very good question about 2008, the bailouts of the banks and other people. If we had let, the conventional wisdom there is that if we had let all the banks fail, that would have made people even poorer. That would have been a very bad outcome. And so I think it certainly helped if you had any stake in the stock market at all. If you owned an S&P 500 index fund as part of your 401k, the bailouts helped you quite a bit. And since 2019, before the pandemic, it's been a little while since I looked at this, but I think the stock market has more than doubled since then. And that's just in the last 5 years. And it definitely doubled again, going back to the post-pandemic era. So, I mean, you've had giant increases in the S&P 500. And part of that is based on the idea that the government will bail out the large banks or any other entity that it feels is essential to the system to keep that stock market going. So granted, it is going to help the richest people the most by far. You know, the top 10% have 90% of the stock, but 60% of the population has some stake in the stock market through their 401ks. And that is, so to answer the question, it helps you a little bit. It helps some people a heck of a lot more. It would have been quite unequal. I would have wiped out a lot of wealth of the, well, I shouldn't say that. I mean, the financial crisis, the 2008 crisis, the recession that happened for a year or 2 years after that, wiped out almost all of the net worth of the bottom 50% group. That group had done a lot of, was very leveraged, meaning they had put down a little bit on homes, in some cases more than one. And when those housing prices crashed, their net worth was wiped out. And it took a long time to get back to a record level, and we're there now. Under Biden, we hit the all-time record, and we're just a hair below that now when you adjust for inflation. We're just beneath the Biden record. The net worth graph looks like it goes down towards zero, and then it sweeps upward pretty consistently until it hits this record under Biden, and then it kind of moved down a little bit and toward the end of his administration, and then up again with Trump. But it's not quite back to that level. But you definitely, I think, want a government that's going to bail out your banking system if you want to keep the stock market healthy. All right, that's a good question, and lots of people have weighed in on that question a lot over the years. All right, so let's look at the Fed. They had their meeting recently. So let's look at their forecast. What they do is you've got two rows in their forecast. They have what they projected in their last meeting, and then what they did in this meeting, June. So you'll see that in each place. What did they think in March? And now what's the latest for that variable? And what you see is that they think growth will be a little slower in 2026. Unemployment rate about the same. But notice this, inflation much higher. And core inflation also much higher. You would expect this one because of gas prices, but you might not expect such a big jump in core, which, remember, core excludes energy and food. So they think that inflation is just going to be a lot higher regardless of whether those gas prices come down. And bear in mind, this was the June forecast, so with the gas prices falling recently, this might not be quite as bad, but still, even in the core area, they're expecting inflation to be higher than before. And then in the out years, still a little bit higher inflation than they thought before. And then down here in the interest rates, quite a bit higher, which is something that tends to scare, normally would scare the markets, where they would say, well, we had priced in this interest rates in the 3.4 falling to 3 range. And now, in theory, they're supposed to price in these higher rates, which should have caused a big decline in the stock market. Maybe it took some of the air out of the high flyers, out of the AI stocks, but that may have happened anyway. It's always hard to tell what caused the stock market to do what it does. But interest rates and asset prices move in opposite directions. So when interest rates go up, that should lower the price of homes and lower the stock market prices. This is a fun game that sort of an inside baseball game that you'll see with financial journalists. And so if you don't see this or haven't thought about this, it's something that you'll run into, is what they call the dot plot. And this is what each dot is where the governor, a Fed governor, thinks that inflation rates are going to be at a point in time, in this case, at the end of 2026. Where do they think it's going to be? And a bunch of them, each of these dots is a person. So 1, 2, 3, 4, 5, 6, 7, 8, 9 of them, this upper group, thinks interest rates may be higher at the end of the year than they are now. And that pretty much balances a bunch of people that think they'll be about the same. And again, this was before the gas prices started falling, which takes some pressure off of this. Some of these dots up here have probably moved down. But it's still something to think about, is that the Fed is not leaning toward cutting rates, it's leaning toward raising them, despite the new Fed chair, who is a Trumper and is sort of, was put in with the idea that he would lower rates as much as he can get away with. He's not necessarily, pardon me, talking that way right now. So we'll see if he's just talking one way and he and Trump have an understanding on the other, but he is just one vote. He does not choose. He's not the only person that decides where the interest rates are going, but he can influence a lot of the ways that the Fed communicates. He has a lot of tools at his disposal that he can use. But again, when it comes to interest rates, he doesn't have all the power. So we're about a year in on the latest batch of Trump's tax cuts, the OBBA, the One Big Beautiful Bill. And let's see where things are at. So this chart shows how many people filed with the IRS taking exemptions and deductions that were in the new bill. The number of filers. So this could be married filing jointly. So it could be a couple of people. So keep that in mind. So no taxes on tips, 7.5 million people, and they were able to exclude an average of $7,000 in tip income from their taxable income. No tax on overtime. 29 million people got some overtime and filed that. 35 million people, seniors, got a $6,000 average deduction. And this is what Trump was saying when he said seniors won't pay a Social Security tax. It didn't amend the Social Security law at all. He was talking about this, a special deduction that seniors could take, which more or less offsets what they would be paying in Social Security taxes. No tax on car loan interest. Child tax credit was increased, and the standard deduction that 90% of filers use, or 127 million, was increased. So there's a lot of things in here for liberals and conservatives alike to enjoy, to appreciate. The problem, of course, is this, which is that about $1 trillion, this is a CBO estimating how much in billions of dollars, how much of the different parts of the bill, how they affected the budget. And so it's by year. And then you've got groupings over here of years. So sort of the next few years and then the out years, or the whole period over the next decade. And what you see here is tax cuts of 4.1 trillion to individuals, which I just talked about, many of those, what's driving that, plus the extension of the rate table. But $1 trillion of that goes to the top 1%. And that's why most Democrats voted against this. It wasn't that we didn't like all the stuff that's helping middle class people. It's that we didn't like the fact that $1 trillion went to the top 1%. And if you look, that's out of the 4. If you look in the row right below that, business taxes cut almost $1 trillion as well. And corporations, generally that are owned by wealthy people. The top 10% own 90% of the stock. And so that's another $1 trillion that's going to the top part of the distribution. And then it offset, I don't remember the details of all of these. I won't get into all of them, but 4.6 trillion in revenue reductions. And then in healthcare, about $1 trillion in Medicaid spending reduced. And so these are things also that Democrats were not okay with. We were not okay with these spending cuts. So it wasn't just the distribution of the tax benefits. It was down here as well. Mostly this probably, now that I think about it, cutting Medicaid, cutting education and food stamps, or the SNAP program. And I'll show you some charts in a minute on how many people that affected. But this was not something that was okay. This took money from the poor basically and gave it to the rich. I mean, that's what this did. It's reverse Robin Hood. And Democrats are not okay with that. So let's look then at what's happening. I mentioned earlier, corporate tax receipts, pardon me. The fiscal year runs October to September. And so this shows the fiscal year from October to June, which is the latest data we have. And so I'm comparing all 3 years are October to June. And the CBO does these monthly budget reviews down here at the bottom, which are fantastic if you want to know what's going on with the budget at any given time. And they analyze all the revenue categories and expense categories and why they've changed. It's a really good report. It's short, has lots of pictures. I'm a big fan. But you can see that Biden had budgeted 2025. The Tax Act didn't hit 2025 particularly hard, but now it's starting to really hit, this year. So we're about, $110 billion lower. And what is that, 30%-ish or so down from what you would expect. And not only that, but the CBO also said that because pre-tax income is much higher, corporations are doing very well on the top line as well. You would expect to see a number like this be more like 450. They didn't give the 450 number. I'm just using that to explain that they're expecting that if you had kept the old tax regime, you'd be seeing tax receipts that are higher than 393. They'd be up in here. So about 5 million people lost healthcare coverage. And that is expected to increase quite a bit over the next decade, according to the CBO, because healthcare is getting a lot more expensive. About 20 million people are paying would have to pay about $1,000 more in premiums because those extended subsidies, expanded extended subsidies under Biden expired and Trump did not extend them. So about 5 million people have lost their healthcare, and usually a lot of that is Medicaid. Part of the expansion of the Affordable Care Act, and some of it is on the exchanges, but the majority of that is going to be Medicaid. This is the actual Medicaid number from the Medicaid.gov. And so about 79 million people at the end of the Biden administration, and now it's down to 75. A lot of that is due to the work requirements. There's a more stringent work requirement on people to qualify for this. Oh, sorry, never mind. That's SNAP. Forgot I said that. This is really about the changes in the Affordable Care Act. This piece. I'll show you SNAP here now. This is SNAP. This one is down about 4 million people, somewhere in there. Is it? We were from 42 down to 37 something. So yeah, about 4 to 5 million people. They're not getting as much support from SNAP as they were. And again, it's because of this 20-hour plus work requirement. that is really affecting this. And CBO expects about 2.4 million people fewer continuously over the next decade because of that change in the policy. And there may be other policies that are affecting this too that I'm not aware of, but the Center on Budget and Policy Priorities does a nice job with that, and you can read their analysis of it. I saw some more. This is through March. I think I saw a chart on this that's a little bit more current than this one, but it's not going to be good news. It'll probably hit a bottom and flatten out for a while, but it's just, these are people that already were in trouble, and then they're in more trouble. So let me pause there. Do we have questions on this, Debbie, or other subjects? And I might not, if there's 10 of them, I want to take a couple. We might wait a little bit, and you're muted. So let's just take a couple questions and then we'll move on.
We'll go with the next one after Renee's, which is Earl's. And he said, and his inquiry is, in the past, when taxpayers bailed out big corporations such as banks and airlines, did a lot of the tax bailout go to only CEOs' salaries and shareholder or stockholders?
Sure. Oh, yeah. I mean, it's, this is 2008 and 9. That was the big complaint, was that enormous amounts of it went to the top. I mean, these were the people that owned the corporations, and they got bailed out. The banks. So what typically happens in a bankruptcy is you wipe out the shareholders. And then the bondholders get a haircut, meaning instead of getting 100 cents on the dollar when the bonds mature, you might only get 60 cents or 50 cents. And that's could have happened, or they could have done something like that. But the government did not want to put the banks through a bankruptcy proceeding. There's no rapid bankruptcy for a giant corporation. It doesn't go like that. And the government didn't, I think if Trump, somebody like Trump had been in office and decided to do that and worked with the Fed to do it, it's possible. But Obama looked at it and said it's not legal. There's no way that he would have attempted to do sort of a rapid controlled bankruptcy, creating a new law, overnight, or his own law to do that. They just didn't have the legal authority. That's something Bernanke said as well. So yes, it did rescue the rich. Now, that taxpayer bailout has always been the term that people use, that the taxpayers paid for it, but we didn't get higher taxes. So it's national debt. It was added to the national debt, but nobody's taxes were raised. During the Obama administration, some of the Bush tax cuts were allowed to expire for the richest people, and so their tax rate went up. But for the most part, the vast majority of the population didn't pay a dime for that bailout. It's in the national debt, but we didn't pay for it. So, and I say that to people too when they say, well, wait a minute, what about, aren't taxpayers paying for student loan forgiveness? Not if their taxes aren't raised. They're not. It goes in the national debt. So it's a fine point, but it's something to think about when you're using the terms that the media gives us, and that those are often Republican branding, depending on who's the president. Like, it's a taxpayer bailout when Obama's president, but the taxpayer didn't pay for it. We just borrowed it. So keep that in mind too when you're like, okay, am I going to suffer because of student loan forgiveness? No, not unless somebody raises taxes on you. The other way would be if it caused inflation, but there's no evidence that it would have caused significant inflation. It's just not what would have happened. So next question.
All right, get ready. Renee's question is, and it is lengthy, so bear with me. Are we legitimately coming up with money for bailouts, and especially to fund wars? No war bonds or other instruments are being sold. So where does the money come from? The U.S. seems to be hurtling toward a financial crash. Corporations and the upper 10% of earners avoid paying taxes, commensurate with their income/revenue. Our ever increasing national debt doesn't help. And the grifting, and where are we heading?
It would be nice to say there's some crisis looming, but I always show people this chart. The U.S. is unbelievably rich. The rich people could very easily pay off the national debt if we made them. And to Carl's point earlier, if you can't tax wealth, you can really get nasty in terms of how much you tax their income. And there is an enormous amount of money that is given to the richer people. It's been a while since I shared it, but the idea of tax expenditures, meaning deductions, exemptions, preferential rates like paying lower capital gains rates, you can eliminate all of that and target that at the rich people. One of my favorite statistics is the top 20% get $1 trillion a year in tax expenditures per year. So if you just eliminated tax expenditures for the top 20%, you would have a deficit that is basically sustainable forever. Nobody would be able to argue that the deficit is a problem at the level it would be after you did that. And so when you look at this, I would just say, don't worry about a fiscal crisis at the federal level. And if we ever did, the government would be faced with a choice. A fiscal crisis means you have high inflation and high interest rates. Our voters have a choice. They can vote to tax rich people, or they can vote to continue having high inflation and 10% mortgages. What do you think they're going to do? If you think that they're so racist that they will continue to vote Republican and never raise taxes on the rich and just be like, it's just I just like to have 10% annual inflation. I'm okay with that. That's my sacrifice. I don't think that's what's going to happen. I think people will eventually tax the rich people if this becomes a problem, but this is not a problem right now. And I don't think that the national debt is a top 50 issue. It gets enormous coverage in the press because it's almost always covered in the Republican narrative, which is we must cut spending. But that's nonsense. You can, like I told you earlier and Carl shared, you can remove the cap on the payroll tax and fund Social Security for 30 years. That's a no-brainer. It's like the most obvious policy choice you could ever make. It's like, duh, obviously you start there and then you take steps later to do other stuff. But it's not that simple politically. This country is very averse to taxes. There is an incredible amount of money spent so that people are worried about fiscal issues. And keep in mind, and some of it's over here on the right, that 39 trillion in national debt is 39 trillion in assets that the private sector has. Those bonds are owned by investors and mutual funds and pension funds. They are the assets of the private sector. So do not panic over the private sector having 39 trillion of government debt. This is all conservative propaganda. And I really wish people would just say, talk to me after we raise taxes on the rich if we still have a problem. That's kind of what I would want liberals to say. Talk to me after we raise taxes on the rich. Otherwise, we don't have a problem.
I have another question for you if you wanted it to be an easy one.
Hold it. Let's keep moving. Well, if it's easy, all right. It's never easy. So we'll see.
Oh, no, this one should be easy. Nora is asking if you will share the Fortune magazine article expressing a divergent viewpoint on the economy.
Which one? A divergent view on the economy that it's bad? I mean, the article, we shared that slide from the Fed, this one.
Okay.
Let me mention this one here. This is an interesting study I think people should look for. Okay. It's the Federal Reserve Bank of St. Louis. It's some of the economists that are there. And so it represents their view. It is not I should probably say Federal Reserve Bank of St. Louis economists, but it says that really the bottom 40% doesn't have a whole lot of spare change to play with. And I think it's a great slide for people that are concerned about affordability, saying that, the aggregates misrepresent stuff and that, really the bottom 40% struggles. Notice also, though, the top 60% is not struggling. It is not the majority that are struggling. It's the minority that are struggling. And again, you can see it here on average, everybody's fine, right? But you shouldn't look at the average. You should look at the groups. And so the question is, how do you help the bottom 40%? I don't think Republicans really care that much about this group, but we'll see. I mean, there is a lot of help for that group in, where is it? Let's see. In here. There's a lot of help for that group in here. Now the same group got hurt again, though, because of this, because of the cuts in Medicaid and food stamps. And so as Carl shared at the beginning, that bottom 40% is generally worse off because of the policies that Trump put in. That was the slide right at the beginning of the presentation. So, again, never an easy question. So, but it's not that the economy is collapsing. The top 60% are doing fine. There's always sorry, lost my place here. There's always people talking, for example, about housing prices, and housing's expensive. Well, 65% of households own the home they live in. It is not a crisis for the 65%. If you are a renter who wants to buy your first home, then yes, high prices on homes are a problem. But if you own a home and you are getting richer, it is not a crisis for you. But the media will always say there's a housing crisis. There's an immigration crisis. I was debating this with somebody on Twitter today, so the numbers are fresh in my mind. The US has 335 million people or so. And the best estimate we've got is there are 15 million undocumented immigrants. Immigrants have a higher propensity to work than native born, meaning they're likely to be employed. They're not just sitting around. And 40% of those, so 40% of that 15 million or so are here legally. They turn themselves in at the border, or they are waiting their day in court. For whatever reason, they have some legal protection, even though they are technically undocumented. 15 million immigrants that come here to work are not a crisis, but going into the election, immigration was a crisis. We had a housing crisis. The media was all about crisis, 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 and we couldn't defend that. And so when you look at data like this, there are many ways to defend that. And it's just, we have to get better at it. Our leaders need to know how to talk about these things. And we never should have agreed that there was a border crisis. And we never should have agreed that there was a housing crisis, because there isn't one. There is a rental property crisis. We should build a heck of a lot more rentals for people. But there is not a problem with housing. It's fine. If you're one of the 65% that's doing fine, it is not a crisis for you. So let's go here. All right, so the new housing law is interesting. And as Carl pointed out earlier, generally a good thing, I think, overall for us, for the country. And it was bipartisan and passed with very high majority. So our Congress can work on obvious no-brainers. And Trump did, to his credit, did not sign it, but he did not veto it, which would have delayed the proceedings. He just complained a lot about it, but he let it become law. So it is now law. And it's not like it's going to fund. There's not a huge amount of dollars in this. It isn't that, and I have to look at a CBO report on it. I've got to see, but it's generally, what it's doing is it has a bunch of things that encourage state and local governments to expand housing. And think of it as an incentive program for states and localities to do the right thing, because they generally control housing. Housing is not controlled by the federal government. It's states and cities that are deciding the zoning rules and what can be built where, and it's not the government, but the government is now offering incentives to expand that. And it will be interesting to see what they do. So there's a lot of verbiage on here. The New York Times did an article. I've got it referenced in the corner. And after I read that, I wrote a summary, and then I put it into the AI, and I said, AI, can you give me a nice table that summarizes it? And this is consistent with the article. So I feel comfortable that this is reliable information, even though it is AI generated. And if you don't like it, you can read the New York Times article, but it's got a lot of these incentives of different cases. Another interesting thing was, right now, the idea of a home being built is like, a bunch of workmen come to that home, or workwomen, and they build the thing. And there's not a lot of prefabricated kind of housing. And there's some rule about manufactured homes had to have some kind of a permanent chassis underneath them. And they've taken that rule away. And so the idea is, you can imagine almost like they use the word Lego blocks, like you can take sort of a prefabricated unit like a Lego block and start building Lego buildings from it. They're designed to fit together, kind of. And it's a really fascinating idea that we may see housing look a lot different down the road, where it's sort of, it's stacks of modular units, but to be determined. But that's kind of basically what all this is, and you've got the presentation, you can read the details. Now, the other part of it that was very political was the idea around corporate home ownership. Corporations buying up, it's not typically a national problem, but it's a big problem in certain areas. And in some cases, African American and poor communities, where a lot of the lower end and sort of entry level housing got bought by corporations, and then they rent it for very high prices. And so there was a lot of that. And so what this law does is it starts to get transparency, first of all, so that they have to report in much more detail what they own, where they own it, what they're charging to rent. These kinds of things are included now as part of it. So this whole page gets into some of the things that they have to do. Now, one of the things that it encourages, and this is down at the bottom, it sort of discourages corporations from buying a lot of these rental homes or these first single family homes. But at the same time, though, if you are building single family homes for the purpose of renting, so building from scratch, it encourages that. It wants to see a world of the B scenario, expand rental supply through new construction, and while protecting families in the resale market. So we'll see how that goes, but that's what it's designed to do. And I think that's an interesting win as well for people, is that let's build a ton of that rental supply and not worry about, building a ton of non-rental supply that would, in theory, make that 65% of Americans that own homes poor. And Trump has said that. I don't want to make, 2/3 of the people poor. He didn't use the 2/3, but he said, I don't want to make homeowners poor. So this is an interesting idea. It's not going to solve all our problems. Most of the problems have to be solved locally, but it'll be interesting to see what those incentives do. And if future presidents and Congresses build on those incentives and put a lot more money behind it, to where a place like San Francisco that doesn't want to build any more property suddenly has all kinds of incentives to do that. And, we'll see. Time will tell. But this is generally, I think, a win. I don't think of this as bad policy just because Republicans passed it. It was it was bipartisan. And there's just some more information on kind of how that part works for the corporate owners. So we had a lot of questions last month, and so we will probably have a section like this whenever there's a lot of questions, and we had some good ones today, so we'll keep doing that. Question was around bankruptcies. What's going on with bankruptcies? And so this table, the U.S. Courts table F2, has all this data, and if you are handy with Excel, you can get at it. But what it shows is kind of interesting. There's two stories that are a little bit different. The business bankruptcies had fallen, or had actually fallen during the pandemic because of all the loans and things that were offered to help businesses. And then those bankruptcies have been creeping up and are now more than they were before the pandemic. On the non-business, so this is personal bankruptcies, individuals, the number had fallen during the pandemic, again, because of all the aid, and also because the bankruptcies were blocked. In some cases, the courts were not allowing that to happen. And now they are, and they've come back up, but they are still low compared to before the pandemic. So at the individual, sort of the person level, things are a little better than they were before the pandemic. But for businesses, they're actually a little worse. Despite all the tax cuts and all the other stuff, they are still seeing more bankruptcies happening. There are a few reasons here. So the pandemic aid reduced bankruptcies via the PPP loans, the stimulus, debt forbearance, eviction moratoria. And then 2020, that was 2020 to 2022, kind of to the trough here. And then since then, the pandemic support ended, and now with higher interest rates and inflation, you're starting to see more pressure on businesses, and that's kind of where that is. That hasn't apparently, it's affected them a little bit, but not quite as much on the personal side. But businesses are really struggling with higher interest rates and inflation. A lot of smaller companies felt like they could not pass the tariff costs on, but larger companies seem to have been able to do that very well with more. They have more market power than some of the smaller businesses. Yeah, so the tariffs and inflation The effect on interest rates, that seems to be hurting businesses while they're at the same time getting these big corporate tax cuts. Bill asked a question around how they count households and tax units, because the CBO often talks in tax unit terminology, and then the Census Bureau, BEA, BLS use households. The short answer is they're really not different. So that's the short answer to Bill's question, but how they get there is a little wild. And so there's some information here on that. I should have probably put where I got it, but it's easy enough to find. But it's this, well, I said the source, but really there's a particular link for it. I can put in a future one. But what they do at the Census Bureau is they say everybody that's living in a housing unit is a household. And so if a kid that was living on their own, and this was Bill's question, a kid is living on their own and moves back home, what happens to the household count? And in theory, if they were living on their own, now they left that place and it's empty, the household units would fall. The number of households would fall. And they define a householder as anybody age 15 plus whose name is on the lease or mortgage. And there's about 131 million of them in 2022, and that's the latest data we have. That's not an outdated report, it's the latest one. And CBO does something else. They do things differently, but then they reconcile it to the household data and they kind of override their definition and they come up with something pretty close. So they're both very similar numbers. And you can get into the weeds with this if you would like, but the short answer is yes, if somebody moves home, it reduces the number of households, but they may still be filing their taxes separately, in which case they would be a separate taxable unit. But the CBO then overrides that anyway and brings the numbers very close together. So, Bill, if you have what I can do is I can email you the link if you want to dig into this a little more, but this is an interesting one. Don't just look at it as, for the intents and purposes of the people on this call, don't get hung up on the difference between households and tax units. They are basically the same thing. Now, the Iran war, a person asked the question, what about the $200 billion for the Iran war? The Iran war. There's a comedian, and he says, how do you pronounce Iran? He says, it's E and a guy named Ron. So Iran, it's not Iran, it's Iran. So Iran, E and a guy named Ron. His name is Mas Jobrani. If you want to see a funny comedian, Mas Jobrani is very funny. Mas Jobrani. Don't ask me how to spell his last name, but you can find him. He's an Iranian comedian. There are a million of them, and he's great. But so $200 billion, that's what they're talking about. But are they going to get that legislated? Because they're not going to get this money. This is not going to get printed. Fed's not going to make it for them unless there's legislation. Right now, the number they're floating is 80 billion. Now we'll see with this next round of attacks if they start to go back toward the 200 and what's going to happen. Something like this is technically a supplemental funding bill rather than a reconciliation bill, meaning the Democrats could block it in the Senate. If they try to sneak it in as a reconciliation bill, that's a different thing, but I don't know how they're going to do that. I'm not sure that's an easy thing to do. So we'll see if they try to get a reconciliation bill and drive that through their way. In terms of comparing the deals, and this wasn't the question exactly, but I had some space on the slide, so I said, why not? This was a good slide, I thought, from Steve Ratner. And I always advocate you follow him. He's on Twitter or other social media. He's the MSNBC morning show chart guy. And he does fantastic charts, and he does them in pretty high volumes. And so what he's saying here basically is that the Obama deal cost us a heck of a lot less money and was more effective than the deal that Trump is proposing, and which has now sort of been sidelined because we're back to shooting at each other again. And we have 17 dead soldiers was my last count, I think, a day or two ago. And in terms of any of those they were all avoidable in this case. And, if you're using units of measure, that is 4 Benghazis. The Republicans got enormous mileage out of the 4 Americans that were killed at Benghazi. This is 17. So keep that in mind. And you're not going to hear Republicans doing Benghazi math, but keep it in mind for marketing purposes. But this is, it's a much worse deal, much more expensive to the U.S. And again, as Carl was saying several times, Trump is not going to share this slide. But the new deal is much worse than the old one, obviously. So that concludes our prepared remarks. As usual, there are various ways that you can donate. You can write, you can comment in the newspapers and in social media. There's lots of different things you can do. And you can, of course, share as many of these slides as you like with all your friends and cut and paste slides out of here and put them wherever you like. Your computer has a snipping tool on it, which allows you to capture images of anything you like. So if you go to the bottom of your screen where that Microsoft thing is, those 4 blue boxes at the bottom of your screen, and you search on snipping tool, with a little practice, you'll be able to cut and paste a rectangle. And by the way, it also does video. You can cut videos of things often. Yeah, I tried to cut Apple TV. It doesn't work on your Apple TV app, but it works on almost anything that's on any other internet site. And you can take video with it as well. So the snipping tool is very useful, and it allows you to cut and paste any slide you like and paste it very quickly anywhere you like to do it. So again, snipping tool. The Act Blue is like a clearinghouse for a bunch of different Democratic organizations, and you can pick from any of them to make donations. And then we have a list of links here of places for sort of evergreen economic information. It's never bad to share why are Republican presidents so bad for the economy, because they are compared to Democrats. 10 of the last 11 recessions started under Republicans. Everybody should take it upon themselves to say that to someone at least once a month. It's just the Republicans have this reputation as being better for business and the economy, and the Democrats are better on every measure. And often it's not even close. It's very different. And people are always shocked when they see that, and their mind won't accept it. And that's just the way it is, but that's how we just have to keep at them. And then a lot of these slides I put on Twitter, and this link's updated recently. I did like 20 slides from this presentation are at this link. And so you can always go there and find that if you're looking for it. You want to share some slides that are there, that's easy. And CBO did a couple great reports on immigrants and how much richer they make us, and how huge, the benefits of immigration are about 10 times the local costs, the federal benefits. And so there are these 2 reports. One's on the federal benefits, which are enormous in the trillions. And then the surge in immigration and state and local budgets are like in the hundreds of billions, low hundreds of billions. It's like 1/10 of the overall benefit. So let's stop there and then open it up for any and all questions.
Ooh, are you ready? Because I don't know if I
Again,
am.
we'll try to answer them, and if we really can't, we will just punt and say, you know what, we'll add it to the list and we'll go from there.
All right. So Earl's question is, would you say that instead of free markets and capitalist society, what we have is corporate welfare?
Well, we do, yes, and with Trump, we started buying ownership interests in more companies. But I don't think we're in any danger of becoming a socialist state anytime soon, despite Republicans starting to say that Democrats are communists and socialists and all that. If we had Bernie Sanders-like policies for 20 years, we might see inequality drastically improve, but you're not going to see massive ownership of corporations by government. You're not going to see government controlling the means of production generally. We're not in any danger of becoming a communist state. And I would encourage people, I really don't like the fact that part of the Democratic Party is calling themselves the Democratic Socialists, and that Bernie Sanders did that. I wish he would use progressives or some other word that is not loaded, but that's not up to me. We have to get better at marketing this stuff, and maybe some people believe in socialism. There's probably some Marxists out there, and make your case. But I don't want to associate that with the Democratic Party, particularly if we can avoid it and use progressive language better. But I think yes, there is certainly a lot of corporate welfare. I mean, Bernie Sanders has highlighted a lot of it, where Walmart and other large employers will pay their employees an amount that they still need Medicaid, or they still need welfare of different kinds. And should that happen? Probably not. I mean, it would be nice if they would pay a lot more. So, in some cases, corporations that are not competing internationally should be able to do that. They should be able to raise their wages and be more responsible corporate citizens. When you're competing internationally, if you're GM or Ford, you're in a much tougher situation. It's not so easy to do that. And so the more the US becomes service oriented, the more we could have service unions that would push that. And they're not pushing their corporations into bankruptcy by demanding they raise rates, because they are not competing against China. McDonald's is not competing against China in the US. It doesn't have to worry about China undercutting them with a cheaper price on the burger, because you have to buy it here. You're not going to China for your burger. Maybe I guess you could get a frozen burger from China, but I don't know anybody that's willing to risk it. I wouldn't. It's just, it's the more our economy becomes service oriented, the more we can become, we can have much stronger service unions than we have, and we don't. And people sort of lump them together. They lump the international competing companies, because that's where we originally had it, was in manufacturing, and we haven't grown the service side as fast as we should, but there's a lot of opportunity there to do that. So if you had workers, a much bigger resurgence in a worker movement to sort of force higher wages, that would be awesome. And to do that, you got to really do kind of what Biden was doing, which you got to get that unemployment rate way down, like in the threes. 3.5. We haven't shared it lately, but Biden on average had the highest real wages, so purchasing power, and the lowest unemployment rate among the last 11 presidents on average. It was a really fantastic time economically, despite an enormous media effort to undercut it. And, it just doesn't get much better than it was under Biden. And as we've said before, if you want to do affordability right, you got to raise taxes on the rich and pay for stuff for everybody else. Pay for healthcare, pay for tuition, get rid of the student loans, and my hardcore MMTers would say, you don't even have to tax the rich to do that. You could just spend. Okay, I'm okay with that. Let's see what happens. And then later, if we have a debt crisis and the interest rates spike up and inflation spikes, then we can raise taxes. But we have to be prepared to do that. Let me take the next question.
All right. Renee says, rhetorical question. And this pertains to bailout. So is that conventional wisdom based on institutional investors' perspectives? And she says, remember the Continental Bank bailout and the 2008 and 9 bailouts? Yet the feds have yet to bail out homeowners in a meaningful way. People played by the rules in 2008 and 2009 and still lost their homes.
Yes, they did. And yeah, I think in hindsight, it would have been nice to have handled that an awful lot better. It wiped out the net worth of the bottom 50%. And you didn't see the kind of bailouts that we had for the pandemic. Like, you didn't see giant checks being sent to people like we had there. And you didn't see the government assume and continue to pay mortgages on people's behalf. There just wasn't a giant amount of cash put in people's pockets. And Bernanke learned a lot from that. And I think one of the reasons why things didn't get a lot worse in 2020 and 2021 was because we put a lot of money in pockets. And they learned that lesson. But back to the bailout idea, again, things could have gone a lot worse. We don't know for sure. But things really locked up after the Lehman was allowed to fail. And that wasn't something that the experts thought was a good idea. And so they bailed them out. Just remember, you didn't pay a dime for that. And as angry as people got, it's my money, blah, blah, blah. No, it's not your money. You weren't paying. You did not write a check to those companies. The government did not tax you more. But maybe down the road, we'll pay for it and we'll see. But again, I've told you, you don't have to tax the bottom 90%. You can tax the rich and get along just fine. So it's just a political decision. And we just have to battle to get the stuff that's progressive. But don't dwell on those bailouts and other things. I would put that behind you. Move on to greener pastures. That was the past, and there were giant bailouts of homeowners during the pandemic. Some households got 15, 20 grand out of those stimulus payments, depending on how many kids they have. I had a nice corporate job. I kept my job, but I didn't get any stimulus. So, and I'm not bitter about it. The people that needed it got it. So, it's just the way it is, but that is don't assume that every time the government's doing something that you are paying for it. It's not the right way to think about it.
Okay. Earl's question, is the middle class shrinking, and what is the future of the middle class?
Yeah, that we shared some slides on that last month. or last month or the month before, it turns out that the affluent Americans are becoming a larger and larger share of the population. Much larger share of the population has more than 100,000 income adjusted for inflation than it used to. So the idea that the middle class, people used to talk about that, like the middle class is going away and you're getting more rich and more poor. It's really, I have to look at the charts again, but what you are seeing is a much larger group in that over 100,000 bucket. And when you look at things like the real median household income was at a record level under Biden in 2024. And there's no reason why it's not a little bit higher now, because we're seeing wages are higher than they were before as well, even adjusted for inflation. So things are looking pretty good. Again, the bottom 40% is struggling. You could see it in that data where it said they don't have much discretionary income. And whenever there's increases in gas prices, it puts pressure on those people. And progressives would love to help them, but they tend to vote Republican. And that's, it helped them on the tax front. We showed you a lot of tax benefits, but the tariffs overrode that. And a lot of the people in that group, 20 million people, are spending more money because Trump did not extend the subsidies for the Affordable Care Act. A lot of the things that they got helped with one hand and slapped with the other, and they didn't get a net benefit. So, it's just, we have to find ways of helping them, and Biden did that. And we need to get back to a Democratic regime that's going to do that.
Right. Ooh, don't use that word regime.
Right.
Yeah.
We need a king. No, Democratic king. No, hardly. We can get it done with a Democratic majority. We can get it done. We can use reconciliation to get it through the Senate. So that's one thing, though, that does bother me. I mean, we've talked about it. It doesn't seem like we have a central group that's kind of as organized as the Republicans. Like, the Republicans always seem to have a plan when they get into office. Where's the Democratic plan? We seem to wait until we have a candidate for president before we really start to talk about it. And you would think that the Democrats would already have the next 4 reconciliation bills ready to go. Put us in power, and year 1, you're going to get the tax cap raised on Social Security and student loan forgiveness. And year 2, you're going to have this, and we have all the marketing materials to go with it, and we're sharing them. There's nothing preventing Democrats from sharing all this information and communicating about what we'd like to do. We spend an incredible amount of time complaining about Trump, and everybody knows about Trump. And the people that are okay with his corruption, they don't care. All they care about is that he's punishing immigrants. And so you're not going to reach them. You got to reach people that have that affordability matters to them, and what you're going to do to make them more prosperous. And we don't have to wait to do that, but we are waiting to do that. We do not have those plans set out there. And that's a strategic error. We should have a leadership group that is always, whenever we are out of power, we should have them. Like when Trump was out of power, he was still in charge of the Republican Party and was saying what he would do if he got back in. Democrats don't do that. We're sort of arguing over something, and it's like, well, let's just have a platform and let's talk about it. And we just don't do that.
Yes, infighting needs to stop. All right. Lynn's question is extensive, so bear with me. Why aren't we taxing Wall Street machines? How do we get all militaries to stand down together to delete and clean up all related warfare sites, projects, products, and programs worldwide, shift the monies, media, education, and government systems to focus on healing humans, not humanoid citizen robots, etc., and ICE and detention centers and weapons, etc. So we are going to all be tied to evil rich oligarchs that want to depopulate humans while they are causing all the immigration and health and environmental problems.
Vote Democrat early and often.
Yes.
I mean, that's your best solution. We are definitely more of a science-based party. We are economically vastly superior to the Republicans on every measure that matters. And we understand that letting in a fair number of immigrants into the country is actually helpful. Now, there are too many Democrats that are bigots too. We've talked about that before. That was part of why Harris lost. Too many Democrats bought into this "let's keep the immigrants out" thing. There's a lot of that out there, sadly. But we need to get over that. We need leaders to confront that, I think. And other people would disagree and say we should just take that one and just ignore, try not to aggravate people with immigration and keep quiet about that. And that may be a good choice. But that's, we can have that disagreement. So I can't answer all those questions. There's a lot of stuff in there about what's going to happen with AI and other stuff. In terms of the military, I will say this. The way that Bill Clinton balanced the budget, he did two things. He raised taxes on rich people. He had a very strong economy, and he froze defense spending. He just said, you're not getting another dime. Defense spending actually fell in dollar terms a little bit for a few years, and then it came up, and it was barely higher at the end of the decade than it was at the beginning. We got a lot out of that peace dividend, and there's no reason not to do that now. We do not have somebody that is going to take giant amounts of territory from us, and we can give Ukraine as much aid as they need, and ratchet back in other places if we choose to do that. Remember that our workers make the munitions that we give to Ukraine. We give them some money and loans too, but that's not the biggest part of it. We make the stuff here. We pay our workers, and then the government gets the stuff and gives it to Ukraine. So don't think that us helping Ukraine is not stimulus for our economy. It is. And people forget that. They're like, oh, you're giving all my taxpayer dollars to Ukraine. I mean, I hear that kind of nonsense. It's like, A, it's not your taxpayer dollars because your taxes weren't raised. And number two, the money the government is giving it to our workers. So people they can't think past the headline. And the next couple of steps, we hope, as you've been listening to me, hopefully you've learned some ways of thinking about these things, of like how to think about the national debt a little differently. The debt of the government is the assets of the private sector should ring a bell in your brain. It's like, well, a lot of people don't think like that because they're always like, debt is terrible, debt is bad. It's like, no, government is not like a household. So, just keep listening to what we're saying and looking at the data that we're sharing, and some of these thoughts will start to coalesce in your brain. You'll be like, oh, wow, that's true. I hadn't thought about it like that. And, I can't tell you what is going to happen with AI. I mean, the world could change overnight if an AI truly is born. But I don't know that that's happening soon, or it could possibly have actually happened already and they aren't saying anything. So, I mean, you never know. I tend to think it's the latter or the former that it hasn't happened yet, but we'll see. We don't know.
Yes, I think we need to end some of these vanity projects. But anyway, enough said on that, because that's wasting a lot of money. Carrie's question is, and he says, goes into the national debt, but that means more interest payments in the future. So either expenditures we benefit from decline, cost to us, or taxes go up.
Well, let me let you in on a secret. Who gets those interest payments?
Mm-hmm.
They go to investors that own the bonds. Now, that granted, they are going to richer people that own the assets. The richer people have much larger amount of financial assets. But then what do those rich people do? In many cases, they spend that money. And so what you've got going on, you should think of interest rates as a giant stimulus going into the economy, boosting wages, boosting growth, boosting those things means it's boosting inflation probably a little bit. And as we say, you got to watch to see our wages outgrowing inflation. That's the key. And so right now that's the case. That's not always the case. But again, there's not, whether it's interest or the level of the debt, it's just not worth losing a lot of sleep over. And if down the road we ever do have that crisis that people are worried about, where interest rates go up and inflation goes up, voters are going to have to make the call. Am I going to live with that? Or am I going to tax the rich more? Because the poor people don't have the money. They just don't. So it's not a question of, well, we could tax everybody. It's like, well, yeah, I mean, you can tax down to maybe the 50th percentile. But there's no money in the bottom 50th percentile. There's just nothing. They don't have any to spare. We showed you the slide. The bottom 40% doesn't have any room. You tax them, they go bankrupt. So it's got to be the upper part of the distribution, and they've got plenty. Carl said it earlier, that slide I always show you, the stack bars, is why I show it in every meeting, because it's such an important concept to learn, is that the top 1% alone have more net worth than the national debt. So, all right, don't sweat interest rates. That's the short answer. or don't sweat the interest payments.
Yeah. Okay, Carrie's next question. How much of the national debt is owned by foreign countries and foreign investors?
It's like a third. somewhere in there, a little less, like 30%. That one I know goes up and down a little bit. And it's been a while since I looked at it. There's a great site on the Treasury. If we search it, the Treasury, foreign ownership of U.S. assets or something, U.S. Treasury. If you do a search on that, it's a report that shows how much each government owns. And it's, I think when you add up all the Arab countries, I think they're probably right near the top, but China and Japan actually owns a tremendous amount of U.S. assets. You might be surprised by a few of the items that are near the top, a few of the countries that are near the top.
Definitely so. I think I looked that up before. Anyway, we have Earl's question. What about farm bankruptcies?
I don't have those numbers handy. We can look at that. There is a bailout in the works, and Carl might have to help me with what the latest on that is. I don't know.
Okay. Earl's next question is, if corporations do not want to pay higher corporate taxes, are we going to see some of these corporations move to other countries where taxes are less, or in some cases where corporations may move to other states where they would not be taxed as much?
That is definitely a challenge. If you tax corporations a lot more, they can go to other countries. And that definitely could happen, and it has happened, right? I mean, they've been doing that for a long time, and the government could take more aggressive action about that. Meaning, when they go, if they try to relocate their headquarters and they still want to sell product into the United States, that we would tariff or tax the product. So there are ways that we can get after corporations that want to relocate if we choose to do that. So I don't buy the argument that you can't tax corporations. You can certainly tax their shareholders. If you don't want to tax the corporation, you can tax rich people more. And I think that's probably the right answer, meaning you would have much higher marginal tax rates on rich people, and you get at it that way. And if people want to leave, you can definitely give them an exit tax on their way out. Fine. You owe us X number of dollars if you renounce your U.S. citizenship. So there are ways that we can do it if we want to be aggressive about it. But corporations are already finding interesting ways of moving their headquarters out of the United States, and they find some tax advantage. And it's been a while since I looked at this, but there are ways that the U.S. is already pretty good about, if they're selling product in the U.S., that we're getting a chunk of that. They can't just hide everything in a foreign subsidiary. They can get some of that, but not everything.
Okay, Hannah's got a couple questions for you. What was the highest tax bracket during relatively good economic times?
We've had relatively good economic times throughout our history when it was as high as 70%. I mean, I think, was it maybe even 90 for a short time, but I think the higher tax rate on the rich, you can have a very good economy. Again, the conservatives or the Republicans have a very good marketing department that makes you think that, oh my gosh, we have a debt crisis, we got to cut spending, blah, blah, blah. I mean, you could tax the rich people just fine. And just as I was saying, the tax expenditures alone for the top 20% are $1 trillion per year, not a decade, per year. They get a giant discount off the rates. One of my favorites, and this is something that gets at the idea of a wealth tax, even if it's unconstitutional to say put a 1% wealth tax on people. When you pass and your estate has money in it, they step up the basis of the assets. Meaning, if you bought Microsoft stock at $25 and $50 and $100, and now it's at $300. When you die, your heirs inherit that stock at $300, and there are no capital gains taxes required. That asset gets written up as if you bought it all at $300 and gave it to your kids. So you can get rid of that. And then all of a sudden, all of those assets are subject to capital gains tax. You can change that law tomorrow. I mean, if the Congress wanted to change that law, they can. And that is a great way to get at an enormous amount of wealth that is hidden from the people. And you can always do it with limits, like estates below $X don't have to worry about that, and above $X, you start to have to, and you can phase it in. I mean, there's all kinds of things you can do to make it progressive. So you always have all these tools. It just, unless you've got a really strong Democratic group working on it, you're just not going to see it.
Okay, and then Hannah is inquiring, I keep hearing that more BBB healthcare cuts are coming after the midterms. Is that true?
Yes, there's both healthcare cuts and SNAP benefit cuts that are scheduled to come in after the midterms, and the Republicans scheduled them that way to
Okay.
try and minimize the impact of those cuts on the midterms.
I didn't know that. All right, we'll have to look at that too. It's a good item to add to our list for next month.
Yeah. Think they're going to make it look like the Democrats are doing it kind of thing, but
Right.
that's my gut feeling anyway. Okay. Let's see here. Let's see. Let me go to the next question because some questions do not have a question. Anna, does China have screwworm? That's Anna's third question there.
No more debt questions. We've answered them ad nauseum. Skip all the debt questions. That's not
Really. Okay. Satya, some of the stasis and remedies you refer to are self-evident or common sense, yet what is the cognition, the anchor at which the carcinogenic regressives want to cut, underpinning serving the well-being of all?
Yeah. I mean, it's a very difficult political problem. Like technically it's easy. Like if you had if Carl and I sat down with Bill, we could figure out a much better tax regime that would be very progressive and solve our debt problem and pay for an awful lot of good stuff for that bottom 40% group. It would probably take us a day and a half to figure it out, and then the lawyers could write it up and we'd be done. But with the politics the way it is, you've got an enormous number of people that feel like they've got to defend the rich. They think that everybody thinks they're millionaires. Like, oh, if you can't have people taxing the rich more, that's going to damage the economy. I mean, all these conservative tropes have been driven into people's brains, and you got to realize that when your first instinctive reaction is because to some extent all of us have been brainwashed. I mean, it's been in the media for decades, literally, these really bad ideas about the national debt and other things. And I speak from experience. I was a debt hawk. I was always for raising taxes on rich people, but I was a big spending cut guy. I thought there was a crisis with Medicare and Social Security, and that's what I grew up on in 2007 and 8, right before the Great Recession, and that was a big thing. There was a big fiscal push. The Peterson Foundation did it. I spoke for the Concord Coalition, which is a deficit watchdog group. I mean, it's just one of those things where I learned from Paul Krugman, actually, and listening to him and studying these issues over a period of years, that is just wrong, that you don't need to do that. And so you have to look for really good sources. I will tell you that if you want a wonderful book that will straighten you out on any number of things, read his book called The Conscience of a Liberal. It's not horribly long. If you come to our meetings a few times, you will understand the economics of it. And it is written as well as he ever wrote anything. And he's a heck of a writer. And you'll get straight. It's basically an economic of the history of the 20th century from the progressive position. And he wrote it in 2007. So it was right before the pandemic. But all the stuff that's in there is entirely consistent with good economic policy. And you'll get a lot out of it. As much fun as it is to hear from me and Carl, you might as well hear from the master. He's the guy, and might as well. His book it's wonderful, and it's not terribly long, and it's written for a mass audience. It's not written for, if you have an economic interest, you're interested enough in the subject to be here, you would probably enjoy that book immensely. And you'll always have it. It'll rebuild, it'll undo all that damage that you've been hearing in the news. It'll rewire your brain if you pay attention to it.
Oh, John.
It's like an intervention. We need a national intervention to cure our Republicans, and it is an intervention. If you read that book, your brain will be different. The logic is overwhelming, and it's so strong. And it's written so well. It's entirely convincing.
I think they'd blow that intervention off, to tell you the truth, David.
Yep.
Yeah. Oh, John.
It's emotional. It's grounded in bigotry and other things. It's not grounded in rational kind of things. It's grounded in emotion, and that's really hard to reach. Somebody that hates brown people is really difficult to reach. You're better off trying to reach their kids before they get any more damage. It's really hard to reprogram those kind of people.
Well, I think John has a kind of comment question, and I find it comical, so I guess we can end on this. If corporations are people, wouldn't they need a passport to leave for another country?
I love that idea. I think that's brilliant. Yes. I mean, we need a giant exit tax. You want to leave the US, you're going to pay, you know, whether you're an individual or a corporation. And there is some kind of exit tax now, I'm sure, but it's not a giant, it doesn't stop them from doing that. So, no, this was wonderful. I thank you guys all for these great questions. We will answer as many as we can in the space that we have for the next month. I'm always interested in trying to research these things and learn about it. So keep asking the tough questions, and we wish we could answer them all, but we can't. We want to focus on, to some extent, on the fundamentals. Get some basic rewiring started in the brains, and be aware of the propaganda that you're getting hit with when you watch the news. Even on, you know, reading the New York Times, even, I just want to throw that thing sometimes, and they're generally in our court. So it's a you know, you gotta watch it. I mean, you know, so but thanks again. This was the July meeting covering the June data of the Northwest Suburbs Organizing for Action Economics and Fiscal Policy Group. We thank you guys for attending. You got copies of the presentation. You can also save the links if you want. What is it? The chat, by you click on those three dots that are up there, and it will save it. It'll walk you through a menu for saving the chat. And then this stuff is put on YouTube as well, and you can always find that with a search, or sometimes we put the links in here. You may see a link in the Zoom. If not this month, you'll get it next month. But all these are recorded, and parts of it are usually shared on, I don't know if it's in the entirety or parts, but are shared on YouTube as well. But read that Conscience of a Liberal from Krugman. You will be glad you did. And you will be armed to the teeth with the history behind a lot of the arguments we're having today. So thank you.
Definitely.
All right. Good night, everybody.
Good night.
Good night.
Good night, David. Hey, Carl.
Thanks for coming.